Hello YouTube, I hope you have had a wonderful start to your week and welcome back to another video. Now as usual I'm gonna start by looking at the markets today before I go through a few news articles that caught my attention and a bit of an analysis of the markets. Let's refresh this so we actually know the most current data. Now we see everything still going slightly down, but the decrease seems to have slowed magnificently. And it looks like we might be bottoming out right here, with some coins actually having some minor gains again. EOS is up 1.4%, Dash is actually up a whole 5%, IOTA up 1%, and Dogecoin going crazy like it has for the last week or so at 6.9%. Now, this is looking a lot more promising than it did just a couple days ago when we saw these crazy drops, and then I think this was 2 days ago when we saw another drop that we since recovered from. But in general, the direction is still going down a bit. We see the market cap still under 200 billion at 195 billion and Bitcoin dominance at 55.7%. It briefly went over 56% in the last couple days, and has since then fallen a tiny bit again. But we will probably not see it fall below 50% until we start a proper bull market, when the altcoins are likely to recover more than Bitcoin. That is how it's always been. So now looking at this, it is looking more promising again. It is looking like we might see a reversal. And we saw early hints of that in the last 24 hours when we briefly saw the prices shot up significantly. But in the 24-hour view, they are still mostly down. So let's look at some articles written about it, shall we? Now, first up from Cointelegraph, of course, all these articles will be in the description, and I won't read all of these fully. I'm just saying all this stuff because a lot of new people came to the channel the last couple days. So if you haven't seen one of these videos from me, that is how I'm doing it. And let's read this together. Sunday, September 9th, following the bloodbath after this week's market crash, Bitcoin's price spiked sharply today. Altcoins have mostly followed suit, making markets a mix of red and green, as data from Coin360 shows. Now, it's still a mix of red and green, but the major currencies, including Bitcoin, are now down in the 24-hour view. Bitcoin jumped over 3% in under an hour today, proceeding to trade sideways just under the $6,400 mark for several hours, before dropping again in the hour to press time. At press time, Bitcoin is up about 1% on the day to trade at $6,241. Let's look at the price now. $6,308, it is actually higher, but the nature of a 24-hour view is that it is of course a comparison to exactly 24 hours before. So it can have been lower a couple hours ago and actually represented a green number then, but is red now. Since taking a steep price hit Wednesday, September 5th, Bitcoin has been trading between $6,400 and $6,500, around $1,000 lower than its intra-week high at $7,391. Today, the top coin has dipped below the $6,400 mark for the first time since mid-August. On the week, Bitcoin is now down 13%, holding fort with 0.64% gain on its monthly chart. Now they're looking at the other main coins. Ethereum also saw a sudden price spike today, regaining the $200 price point for several hours before slipping back down it. Ethereum dipped under the $200 price point this weekend for the first time since November 2017 and is trading at around $194 at press time. Let's see where it is right now, $196. Once again, slightly higher than when this article was written. At the start of the month, Ethereum had broken through the $300 threshold, but the altcoin has continued to shed value since its major plummet September 5th. On its weekly chart, Ethereum is down over 34% with monthly losses around 45%. That makes Ethereum probably the worst performer of the major cryptos in the last month or so. Among the other top 10 coins on CoinMarketCap, only 3 are in the red and only slightly, with the rest seeing 1 to 6% growth on the day. Stellar, ranked 6 by market cap, is down the most and only just seeing a little over 1% losses. EOS is seeing the most growth among top 10 cryptos daily, up 5% on the day to trade around 4.95. See how it is right now. Actually trading higher, like just about everything, but because of the nature of 24-hour price developments, it is looking worse right now, despite the prices actually being slightly higher. But that is just how these numbers are. Litecoin has also seen relatively solid growth on the day, up 4% to trade at 55.10. Let's see where that is right now. It is at 54.27. That is actually slightly down. Among the top 20, coins are also seeing mostly green, with the 2 coins in red down less than 1%. IOTA is up 5.1% to go to 0.559. Let's look where IOTA is right now. IOTA is at 5.6, also slightly higher and actually still in the green. Despite the market's sudden surge today, total market cap of all cryptocurrencies is still dropping, currently around 195.5 billion. Let us see, 195.3 billion. That has actually still fallen. Yeah, we don't need to see the rest of this. This is just a more in-depth analysis of what happened in the last day or so. But it looks like we're at least bottoming out, with some of the coins collecting some steam to possibly push upward again. It's looking relatively promising to me. Now, on this channel, I already talked about there almost certainly having been some market manipulation in the last couple of days, pushing Bitcoin down and dragging everything else along with it. We saw we saw news leaked about Goldman Sachs that they allegedly were scrapping their crypto trading desk. Someone shorted Bitcoin just before that, sold off a whole shit ton of them, and then it turned out it was fake news. And someone was able to sell at a high price, push the price down, and then buy at a lower price. So that was almost certainly market manipulation and insider trading. And now some major outlets, or more major outlets, are picking up on it. Hack.com, article called "Did a Whale Sink Bitcoin?" Bitcoin's precipitous drop over the past 4 days may have finally triggered a relief rally. The leading digital currency fell to nearly 1 month lows on Sunday before rebounding 4% in a matter of seconds. Now this is just going through the movements again. This is the interesting part. Bitcoin whale? Bitcoin's sharp and sudden reversal has not only neutralized the long-term bull market, it has raised the specter of a more protected downturn in the near future. The coin's $1,000 correction, which occurred over the span of 24 hours last Wednesday and Thursday, is a strong signal that bearish forces still control the market. This means we may be entering a period marked by lower lows and lower highs, which makes day trading extremely difficult for those not accustomed to tight stops. That said, mining costs have enabled Bitcoin to maintain a firm price bottom at $6,000. This is the level at which some miners struggle to keep their operations profitable. While Bitcoin's sudden reversal was tied to rumors, now proven false, that Goldman Sachs was abandoning its plans to launch a crypto trading desk, the wheels were set in motion roughly 1 week before the collapse happened. That's when roughly $800 million worth of Bitcoin and Bitcoin Cash were moved to multiple wallets, possibly for liquidation. Roughly 14% of the funds were later moved to Bitfinex and Binance, 2 leading digital currency exchanges. Several hundred units of Bitcoin were also reportedly moved to BitMEX, one of the most popular derivatives markets for cryptocurrency. According to investigations, which I would have liked if they had actually linked which investigations here, the funds likely belong to Dread Pirate Roberts, a former Silk Road administrator and Mt. Gox user who has been dormant for the past 4.5 years. Wallets associated with Mt. Gox have undergone a slow and gradual liquidation by Nobuaki Kobayashi, the so-called Tokyo Whale, tasked with offloading all remaining assets of the now defunct exchange. Kobayashi has already sold hundreds of millions of dollars on behalf of Mt. Gox creditors, but still has billions more to offload. Some people in the cryptosphere have credited this Tokyo Whale as being one of the main reasons the markets haven't been able to recover. I haven't looked at it close enough, but I think there is a very good case to be made that at least part of this year's price movements are down to him repeatedly selling off just when Bitcoin hit certain prices and tanking the market, because millions and millions and millions being sold at once do that. But in this case, I'm not sure if it was just down to that. I think it's a bit too coincidental that this happened just before fake news were being spread. I think this was whoever spread those fake news, and who knows, he might have been the inside source, but I doubt it. So yeah, just seeing this on a not directly crypto, I think Hacked is not directly crypto. I'm actually surprised. I didn't realize Hacked was a crypto page. I guess it is. Anyway, seeing this on not one of the usual pages is still interesting. Next up, investor. Bitcoin fell due to regulatory and sell pressures, will recover soon. Another analysis. According to Jonathan Cheeseman? I don't think it's Cheeseman, but I'm still gonna say Cheeseman, it's funnier. a partner at investment firm Distributed Global, Bitcoin has fallen due to 5 major reasons: macro trend, speculative dominance, regulatory uncertainty, short selling, and scams. But as the market and cryptocurrency as an asset class continue to see improvements in infrastructure and regulation, Cheeseman explains that a growing number of investors will recognize cryptocurrencies as robust and legitimate stores of value. This is the same thing I have been saying. This is what I've been saying. It's so nice to see investment professionals echo my sentiments. He said, "For some, things are even more acute now, Venezuela and Turkey being the most obvious examples. And debt sustainability is a real risk to many fiat currencies. In looking for global stores of value, gold has served a purpose, but it is archaic. A digital store of value is both more practical and more in touch with the growing millennial generation." Now they are looking at some of the regulatory uncertainty that we had before. Let's read this together as well. Up until 2018, infrastructure targeted at institutional investors and large-scale retail traders was virtually non-existent. The last barrier between institutional investors and the cryptocurrency market, that is custodianship, was not eliminated, and there were very few publicly tradable instruments that could facilitate the demand for cryptocurrencies from accredited investors. The weakness in existing infrastructure along with regulatory uncertainty around cryptocurrencies prevented large sums of capital flowing in from the broader financial market to the cryptocurrency sector. This is also what I've been saying for a long time. Once everything is regulated to the point, and once there are enough products being offered to mainstream investors and to large investment firms, we will see so much capital flowing into crypto, it will push everything up, it will go crazy. Hence, the speculative bubble of the cryptocurrency market in 2018 was similar in concept to previous bubbles in 2012 and 2016, in that the ongoing correction was triggered by the panic sell-off initiated by speculators and individual investors in the market. The 80% correction of the cryptocurrency market occurred in a similar way as previous drops, but the expected recovery of the market will drastically differ from previous attempts. In the past, Bitcoin had failed to secure momentum at major support levels and demonstrated no signs of a recovery for over 2 years. This year, Bitcoin has made 3 attempts to break out from the $6,000 support level, and although they were unsuccessful, Bitcoin has not fallen significantly below the $6,000 support level. But as regulatory frameworks and trusted custodian solutions in the cryptocurrency market continue to improve, more institutions will be willing to take a big risk to commit to a market that is at its early phase. Cheeseman wrote, "Regulators across the globe have struggled with how to responsibly police crypto. A decentralized movement poses a lot of complications in classifying the assets, and bad actors muddy the water. As a result, things have been moving fairly gradually, but overall regulators have taken a tone that shows they respect the potential innovation. The regulatory uncertainty has in turn slowed institutional investors, as has the lack of custody, insurance, data, and risk management solutions." And as the final part of the article, they talk about progress in South Korea and Japan for a bit. Once again, this will be linked so you can look at it. I think he makes some very good points. I think he is spot on, especially the 5 reasons he cites here: macro trends, speculative dominance, regulatory uncertainty, short selling, and scams. Now, I've talked about how dangerous scams are for the crypto market as a whole a while ago. Anytime some major scam happens, mainstream media picks up on this stuff, and it really colors people's perception of the crypto market, and it makes just average investors that aren't already deeply into the crypto sphere, just average people, it makes them scared, it makes them worried, it makes them not want to invest in crypto. The more we cut down on scams in our community, the more faith people will have in crypto. Short selling, this is what has dropped the market multiple times. Regulatory uncertainty, like I said in this video, like I said before in other videos, we need enough regulation so that investors who are willing to push millions and millions or even billions into the markets know where they stand. Speculative dominance and macro trends, yep, that is spot on. And I think it's very interesting to look at this drop, this bubble, compared to the previous bubbles in 2012 and 2016, because it is generally very different. We saw drops and it just continued going down, 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 down for years. And this time we saw multiple attempts for Bitcoin to break out. There is definitely a lot more momentum this time. I don't think this one will last 2 or even 4 years. I think within the next couple of months we will see everything shooting back up, especially with a lot more regulation happening, with a lot more large companies moving into the crypto sphere, with a lot more large banks working with blockchain and crypto products. I think the near future is very bright for cryptos, and we will see positive movement very soon. But now let's look at some other news stories that I have open here. Next up, BitTorrent courted EOS Filecoin crypto creators prior to Tron sale. Now, I also talked about this already. BitTorrent, of course, bought by Tron, and we found out a couple days ago that the people behind Neo also made an offer that was actually higher than Tron's offer, but rejected. And now new documents were revealed that a bunch of other tokens and a bunch of other crypto players were also interested in purchasing BitTorrent. BitTorrent, of course, has a relatively decentralized technology that ranges back a pretty long time. Before cryptocurrencies, BitTorrent was pretty much the most decentralized thing on the internet, file sharing peer-to-peer, and it makes sense that crypto companies would be interested in both their technology, in their staff, and in... I just lost my train of thought. And in their user base. That is what I wanted to say. I'm not going to read this whole thing. It is also a very interesting article that I definitely think you should take a look at. But we now know that EOS was also apparently interested. But it appears that EOS did not make an offer. There was some kind of discussion with EOS though, and with Filecoin. Next up, and this is very good news once again, because it is more major banks offering crypto products to just normal everyday investors. Citigroup to offer low-risk crypto product for institutional investors. Now, once again, relatively long. Well, it's not that long. I guess we can read it. Investors may now have a new way of purchasing cryptocurrencies without actually having to own them. New York-based banking giant Citigroup has reportedly developed a product which could reduce the risk hedge funds and asset management firms are exposed to when they invest in cryptocurrencies. Now, reducing risk, of course, one of the main things that institutional investors are interested in. The crypto volatility and the risk associated with that is one of the main reasons we don't see even more money flowing into crypto right now. According to the Business Insider, the instrument, which was jointly developed by Citigroup's Depository Receipt Services team and the Capital Markets Organization team, is known as Digital Asset Receipt. While Citigroup will issue the digital asset receipt, a custodian will be responsible for holding the cryptocurrency assets. Upon issuing the receipt, Wall Street clearing and settlement services firm Depository Trust and Clearing Corp will then be informed by the financial giant. This is expected to offer legitimacy to the fledgling asset class, as well as providing investors with a new way of tracking an investment with a familiar system. Now, I don't think we need the rest of the article right now, but once again, it will be linked in the description, so do read it if you are interested. Bottom line is, another low-risk crypto product is coming from a major player in the financial world, and this is just a relatively safe way for institutional investors to get into the crypto world. I mean, I know a lot of people are unhappy with big banks getting involved in the crypto world, but the way I see it, when you have a decentralized thing like that, you can't stop anyone from getting in. So they're going to get in some way anyways. We can't stop them. So we might as well look at the positives, and the positives are that this means a lot more money flowing into the markets. This means legitimacy for the markets, and long term this will make us all money. That's how I'm choosing to look at it, whatever ideological differences one might have with these large companies. And last but not least, Ethereum has a bright future, says CEO of Morgan Creek Capital. I always like to end on positive news like this, on a positive opinion, so let us look at this article from AMB Crypto. On September 8th, Yahoo Finance's Dion Rabouin, I don't know how to pronounce that, Rick Newman, Dan Roberts, and Mark Yusko, I don't know if I pronounced that correctly, CEO Morgan Creek Capital Management, spoke about Ethereum's downward slope in the market. The price of Ethereum has been down the most, or at least close to most, of all the altcoins in 2018. Dan stated that many ICOs were either fraudulent or a scam, and those ICOs which were not a scam have also rushed to cash out their Ethereum. Mark Yusko was asked about such instances and whether it was bad news for the Ethereum blockchain platform. He said that the internet created opportunities in 1996 and allowed the digitization of commerce. The next step would be building up the trustnet, and Ethereum was a protocol designed to create the trustnet, which could start in 2024, he added. People might say it's 6 years from now. Well, it's like 1993 or 1994 internet, when Google was just being thought of and nobody thought it was important. Mark also spoke about the internet protocols like TCP over IP, HTTP, and SMTP. These protocols enabled the world to create smartphones and other technologies. He further added that Ethereum is just like another protocol which will help individuals in creating the trustnet. The difference between the internet and trustnet was that on the internet, the protocol developers, Tim Berners-Lee, the creator of TCP over IP, was not a rich guy, but the application developers like Zuckerberg and Sergey were the ones who made all the money, he said. Mark further explained that the protocols have more value, thus making Ethereum very important and profitable in the future. According to him, the difference between Bitcoin and Ethereum is that Bitcoin is an application on the blockchain, which is the most powerful supercomputer and also most secure network in the world. On the other hand, Ethereum is different. Think of it as the World Wide Web of the trustnet. Rabouin spoke about Jordan Belfort's comments on how Bitcoin was a scam and stated that Jordan was not a believer of the cryptocurrency space. Jordan also stated that he was a scammer, and to him the cryptocurrency space was a complete scam. To this, Mark said, the problem is he was talking about ICOs, not Bitcoin, neither Ethereum, but he was talking about utility tokens, and some of the utility tokens were a scam. Anywhere where there's capital, bad people are going to show up. And I think this is a good comment to leave you guys on. There are scams in the crypto world. There are bad actors moving into the markets, trying to abuse the momentum, trying to scam people out of their hard-earned money. And that is bad, but that will happen in any sphere that has a lot of money flowing into it. You will never get rid of all scammers. The important thing is to focus on the good projects, on the valid projects. Pretty much all the major cryptocurrencies are not scams. They have real technology, they have real use cases, they have large real companies standing behind them with a lot of funding. We are looking at EOS, who raised, I believe, 4 billion. We are looking at Ripple, who raised, I believe, 20 billion. These are large corporations behind them. They have money, they have technology, they have connections. There are scams in the crypto world, especially as we're talking about ICOs, but the crypto world itself is not a scam, and it has a bright future. And that is what I'm gonna leave you guys on today. Check the description for links to all these articles, as well as my social media links and ways to support this channel if you would like. Leave your opinion in the comments, of course, and thanks for watching. Have a good week.